Results from Nvidia this week creating ripple effects through the chip space and the tech industry as a whole after signaling some continued strength in AI. Joining us now, we want to bring in Matt Bryson. He's Wedbush Securities Managing Director of Equity Research. Matt, it's great to have you. So there's been lots of focus on Nvidia, but we want to push beyond Nvidia this morning for investors that are looking to gain more exposure to that momentum that was very much highlighted in Nvidia's results. Where do you think the best picks lie?
Yeah, so I mean, everyone's focus is on the AI space. When I think about what NVIDIA told us, they told us that next year looks really strong. Some other ways you can think about investing in AI on the server side, you've got Supermicro and Dell, both providing servers. Obviously, Supermicro has some other issues in terms of their financials that are moving the stock these days, but certainly they benefit from a strong AI environment. You can look over in networking, where you have names like Broadcom and Marvell. Both of those also play in terms of supplying custom chips into the large cloud service providers. So fueling their efforts to build their own chips for AI. And then you've got other areas like storage, which don't necessarily benefit directly. But at the same time, if you're building out these big AI data centers, you're going to need to store more data. And I in particular like Seagate, Western Digital, and Silicon Motion in that space.
You know, as you think about how far NVIDIA has run, and then for those other names that you just mentioned, what the potential for shareholder returns look like, I mean, what is perhaps a good rule of thumb or a good perhaps targets to really think of with that regard, and if they're able to kind of hang on to the coattails of the broader demand that NVIDIA has been talking about?
Yeah, so with NVIDIA, I think what investors are really thinking about is NVIDIA trading at 30 times future earnings. And so it's not so much that the multiples going up, rather it's expectations around 2025 having improved substantially that I think has driven the stock. I don't cover Marvell and Broadcom, but when I'm thinking about the storage names, they still have relatively limited multiples that they always have. And so they're not getting much of this benefit from the AI improvement. Whereas I think that when you think about data growth, data historically has grown at 30%. I don't think that those assumptions are baked into those names anymore. So I think there's room for effectively revenues to move higher, which moves earnings higher. And even if they trade off kind of the multiples they're trading off, I think you see the earnings profile move higher, and that drives value for Seagate, Western Digital. Silicon Motion, I think they're moving into the space, the enterprise space. They'll support AI, and that shift isn't really understood for that name.
Matt, is there anything, when we focus specifically on NVIDIA and what we heard from Jensen Huang and Colette Kress on their earnings call, is there anything that NVIDIA is not doing that they should be doing, do you think, at this stage?
No, I mean, they're dominating the AI market. They're offering a view of what happens moving forward. It seems like they're taking their advantage in accelerators and transitioning that to owning more parts of the system. So, building compute, building networking, building software, and all of those shifts lock NVIDIA in, right? If I'm invested in their software, I'm probably not going to shift to another vendor. So no, I think they're doing everything they should be.
Matt, what about the regulatory environment? Clearly, we could certainly see a shift come January when we have a change in the White House. How are you looking at that as an analyst?
Yeah, so I mean, there's a little bit of uncertainty, right, in exactly what happens with the new administration. In terms of supply chain, which people have talked about as a risk, I don't really see a ton of risk. A lot of supply, particularly for data centers, already moved out of China. When I think about tariffs, in a lot of cases, if you're taking chips from Taiwan Semi, for instance, you're going to continue taking chips from Taiwan Semi. There's no alternative. In terms of kind of shipments into China, it's a relatively limited portion of NVIDIA's revenue, for instance, on the data center side. So I think there's a little bit of risk there, but I don't think that it really changes the story for NVIDIA in terms of them growing. So I think it's something to think about, but with most of my names, I don't think it's game changing just because, again, there's either limited alternatives or limited revenue at risk.
Matt Bryson, Wedbush Securities Managing Director of Equity Research. Matt, good to see you. Thanks so much for taking the time.